All right, what's going on, everybody? In this video, we're going to be going over rejection blocks. So a couple of you have asked me to make a video on rejection blocks, and finally I'm getting around to it. So in this video, I want to go over what a rejection block is. Like, we're going to go over the actual concept. We're going to go over how to use it. And more specifically, we're going to go over when to use it, because a couple people who, when they first learn rejection blocks, they start to just use every rejection block. And you got to understand, like, there's a time and a place for every concept. It's not always going to work. Rejection blocks are not 100% accuracy. I'm going to teach you exactly how I use them, because I'm not one of those people who like really top and bottom tick like that. I'm really waiting for more confirmation, but I use rejection blocks as an extra confluence, similar to, I went over OTE yesterday. I use that as a confluence. I'll also use rejection blocks as like an added confluence behind my trades. So basically, I want to be going over the free indicator as well. So we do have a rejection block indicator on TradingView, but I'm going to explain the concept first, so that way you best know how to use the indicator, and I'll teach you guys how to set that up as well. So basically, rejection blocks. What are rejection blocks? So rejection blocks are essentially just very long wicks that do something very specific. So basically, say we have some price action like this, and we have this level of buy side liquidity up here, right? So we have, liquidity resting right here, right? Say we do something like this. Basically, this is gonna be hard to draw the way that I drew it. So we're gonna kind of make a pivot. But say this is buy side liquidity up here, and then say we have a candle like this, and essentially the wick of this candle comes up and it takes out this buy side liquidity. So this is buy side liquidity. This is pretty sloppy, but buy side liquidity, we get the wick of a candle that creates a liquidity sweep. And then what's important about this candle is it closes back below that low, or below that high, excuse me. So we wick up and then close below the high that was right here. This now becomes a rejection block, this wick right here. And it's the same thing in the opposite case scenario. Say we have like some price action and we have, say we have some price action and we have some low down here. And then basically we have, let me see if I can do a candle a little bit better. Say we have a candle that like prints like this, and then you guys can't even see, hang on. Say we have a candle that's printing like this, we take out the sell side, and then this candle closes back above the sell side, and then it also creates just a wick behind it like this, usually a pretty long wick. It doesn't have to be, but the better rejection blocks are going to be long wicks like this. And basically we cleared out the sell side and then closed back above the sell side. This now creates a rejection block. So that's essentially the concept. It is a little confusing at first, but I mean, that's really all there is to it, right? So how do you actually use these to your advantage? What do you do with these wicks? So in theory, these wicks should be protected, right? The idea is that since we already cleared the liquidity and then we created a rejection from that level, there's no reason for, in this case, this high to get traded above again, and there's no reason for this low to get traded below again, this one down here in this example, right? So essentially, what we can do is we can use these wicks as basically like almost like fair value gaps, or just like PD arrays. That's the general concept. Any ICT concept is like a PD array, and you can use them as points of rejection. You can also use them to kind of frame your bias a little bit. So if you see a rejection block in hindsight, we can kind of assume that, we're going to continue lower. However, some people, so the way that I like to think about it, right, is you can also use this and almost expect rejection blocks to get returned to, but not actually take out the high there. So some people who trade rejection blocks as their main strategy, obviously they need to eat at some point, right? They need to, they get entries in the market just like we get entries in the market. So eventually you'll see price runs that will come back up to the rejection blocks and then reject from them again, not taking out the high like so, right? So I know this is a little confusing. We're actually going to break onto a chart to better describe how we use these. So this is the rejection block indicator. I'm going to actually walk through the settings super quick on this before we go into how to actually use the rejection blocks. So as you can see, there is a lot of settings on this indicator. This one is completely free on TradingView. And actually I was supposed to publish this one as part of our Pro Plus suite, but I accidentally published it for free. And I just basically left it up. I realized, and I was like, you know what, the damage is done. I'm just going to leave this up as a free resource for anybody. And now this is one of the most used ones on TradingView. So you guys can use this. I'll leave a link in the bio for if you want to check it out. It marks every rejection block that you'll need to see. This is actually a perfect example right here. As you can see, this wick is getting marked out, right? Why is this wick getting marked out? Well, you see how we took out a high to the left, and then essentially, this is another word for this is turtle soup. You may have heard people call this turtle soup, where basically we wick above a high and then close below that high. It's the same thing as a rejection block, right? So here, we're going to break back into this. Swing strength, you really don't need to worry about this. I would keep it on sensitive. This is essentially going to show you, I don't really know how to explain this too well. Basically, it shows you more rejection blocks when it's on sensitive. When it's on strict, it's going to show you fewer rejection blocks, but it's going to show you very obvious wicks. I think it's important to keep all rejection blocks in visibility. And for that reason, I would say keep it on sensitive so you don't miss any. maximum visible RBs. This is pretty self-explanatory. This rejection block time frame shows rejection blocks from every time frame. So this setting right here just determines how many from each time frame you want to see. If you want to see 2 from each time frame, 1 from each time frame, this is essentially just to keep your chart a little more organized and clean. Only RBs closing in the trade direction. So what this means is basically, this is pretty interesting. I didn't go over this. This is an example right here. So some people teach rejection blocks that the candle that does the damage. So essentially we have this rejection block right here, right? You see how we swept out this low to the left and then we pushed up higher. So some people teach that rejection blocks need to be the same essentially direction as the confluence. So what that means is this is a bullish candle. This is a bullish rejection block. Since this is a bullish candle and a bullish rejection block, this is a more valid rejection block. Some people teach it like that. I don't think this is always true. To be honest, I've seen scenarios where this can be a bearish closing candle, but the wick still does this, sweep of liquidity and then close inside the range. So I gave people the option because I think Powell teaches it to where you need this to be a bullish candle for it to be a rejection block. But I don't think that's always true. That's not how I learned it from ICT. So I gave people the option to toggle it on and off. I would keep it off, but if you're a Powell student or something who uses our code, then you could turn it on. Higher time frames is pretty self-explanatory. You can have up to 3 higher time frames on this, 5 minute, 15 minute, 1 hour by default. You can turn them on, you can turn them off, whatever you want to do with it. And then you can also show the label in the time frame. So basically when I had the indicator on before, it's going to take a second to load. As you can see, I have a bunch of rejection blocks on, so this is a little messy, but you can see the label in the bottom right of the box, M5 rejection block, M15 rejection block. This just shows the time frame that it's coming from basically. So you can turn that on and off depending on, your preference, but I suggest keeping them on. And then visual, so basically this setting right here just basically describes how the rejection blocks look. So I'm actually gonna show you exactly how I configure mine to kind of keep it clean. I trade with this indicator on every single day, but I don't like to have all these like messy charts or messy like boxes on my chart. So this is usually how I clean up this indicator. I will go remove box fill, and then usually I'll do the 0, 100, and then turn off the 25 and the 75. And then I like to turn the 50%. I like to turn the 50% to this red color right here. And then basically I just enable it and you just let it compile for a second. And when it's done, it will look pretty much something like this. So you'll see a bunch of dotted lines and a bunch of like red lines. This still does look a little messy, like there's a lot of stuff going on, but in my opinion, honestly, like this is all relevant information. And the reason why there's so many rejection blocks right now, this is a good segue into like when to use rejection blocks. We are in this very consolidated price action. I'm recording this video on the bank holiday, so obviously there's not a lot of movement, but this kind of goes to show rejection blocks form and are very effective in this kind of consolidation price action. You realize how we're not like really breaking any highs or lows. We're just kind of dipping into rejection blocks and then bouncing between them. This is very typical in like consolidation price action, and you can actually use this to trade consolidation. I don't really recommend doing so. You need to trade consolidation differently than if you were trading like a continuation or a reversal. If you're trading within a chop condition, you can still kind of scalp within this. As you can see, there are like little inversions within this price action where we'll come up, tap a rejection block, make an inversion, and then displace towards the bottom of the range, but you need to play this differently. You're obviously not trading this where you're expecting a breakout of the range. You're expecting it to stay in consolidation and to bounce between rejection blocks. So that's one kind of idea that you can use for rejection blocks. But this isn't really the optimal way that I like to trade them. Some people do trade like this. Me personally, I still do stick to inversions. Inversions are my main entry model, so I'm usually looking for instances where there's a rejection block on the higher time frame, and if I see us get a reaction, the reason I set it up where it's 0, 100, and 50% is you will usually get reactions off rejection blocks from either the 0 or you will get reactions off the 50%. And if you can see in hindsight that we tap the 50% of a rejection block and then form an inversion, very clean inversion, then that is usually a very strong confluence where you can play an inversion in these scenarios, especially if you start to align it with other ideas too. Sometimes you'll have a rejection block that lines up with OTE, or sometimes you'll have a rejection block that has an SMT at the bottom. And then if you have an inversion after that, you can use that to your advantage. So I'm gonna go through and try to find a couple of examples of recent price action where we've used rejection blocks. This happens a lot more than you realize, and you only really realize it when you're looking for it. And the best way to look for it is just simply having the indicator on your chart. Because if you're unfamiliar with the concept, you're not gonna think to mark it out in real time. You have your own analysis that you're going through, but you can use these indicators as almost like case studies to look at a concept that you wouldn't normally be marking out or looking for, and then see how the market reacts off these levels and combine it with what you already know. That's what I recommend. So let me try to find a couple examples, and then I'm going to end this video here in a minute. So all right, so here I've found an actually perfect example of how to use rejection blocks to your fullest potential. And this is even combining the video I did yesterday on OTE. So if you haven't watched the OTE video, I do suggest you watch that too. This is a perfect example essentially of how I trade and how I view the market. Aside from liquidity, because that stuff is important, looking for session liquidity, equal highs, equal lows, data highs, data lows. That stuff is going to be like first priority in terms of knowing where the draw on liquidity is. Then second priority, like this is really how I view the market. I really like to look at OTE, and I like to pay attention to rejection blocks when they form. So basically, here's a perfect example. We have this rejection block up here. This is just kind of an example for you guys to see it again on the chart. This is the 4-hour time frame, but as you can see, this wick swept out the one to the left and then rejected back into the range, creating a rejection block. And then as you can see, like I said, this is the 4-hour time frame. So we can measure out. We have this OTE right here, right? So we're sitting right inside this little golden pocket range on the 4-hour time frame. So me looking at the market, I'm kind of expecting some kind of reaction out of this little golden pocket. Some people might see this and think, oh, we just inverse this leg, we could go long, but I would be careful sitting within this golden pocket, taking longs, right? So I'm open to looking for shorts on this day, right? Then we go down to the 1 hour and we see we actually do have a rejection block that just formed, right? If you could see, we have this high right here, all the way to the left, and the previous 1 hour candle swept that high and then basically like reacted off of it. It rejected off that high and then left this long wick behind. This right here is the rejection block, right? So now we have two confluences going for us. What do we have? We have that OTE of the higher time frame range, and now we just created this rejection block on the 9 a.m. candle, right? On top of it, we also have a new week open gap all the way down here. As we can kind of zoom in and see, we have some kind of draw on liquidity right here. We have unfilled fair value gaps below. So now we're just kind of building that story, right? OTE, rejection block, filled gaps below, like new week open gap below. Like we have so much kind of snowballing in our favor. And this is really how you do have to use rejection blocks. So you can't really just use it as a standalone concept. You kind of have to like add it as a tool in your toolbox. That's what I'm trying to say. So as you can see, 15-minute time frame, we have the same picture. Essentially just rejection block up here on the 15-minute, we swept this high to the left. And yeah, I mean, that's essentially it. As you can see, the indicator, as we're scaling down, it does mark this rejection block for you. And there was one all the way back here. This is probably from the 1 hour time frame or something, but you can see in hindsight too, this is some kind of higher time frame rejection block that's getting marked out. And in hindsight, what happened here? We don't even have to zoom in far to see. We can see the bodies of these 15-minute candles stopped at the 50% and then kind of made a reactionary move off of this rejection block. And now in current time right now, we have this rejection block, right? Let's scale all the way down now to the 5-minute time frame. Same idea, rejection block, 1-minute time frame. And this is really how I want you guys to kind of like use it. So the benefit of having these high time frame rejection blocks on the low time frame chart is so you don't really have to cycle the time frames. If you forget or you get caught up in like the noise of the 1-minute chart, I think a lot of new traders do that where they're not cycling the time frames as much. You can sit on the 1-minute chart and visualize that we have so many rejection blocks stacked up here. It's marking that one from a couple weeks ago, showing it on the lower time frame, and it's marking this current, as you saw, it was on the 15-minute, it was on the 5-minute. These were all rejection blocks. And as you can see, the indicator, these 50% lines, you want to look for sensitivity right around these 50% lines. You can clean this indicator up. I do not like when we do have like a bunch of rejection blocks kind of stacking up. It does get the chart a little messy, but it is a good reminder of the fact that maybe somebody is in this price action, right? And maybe they take a long right here. I'm going to show you what happens to this, right? So say somebody's like trying to play this continuation long. It looks like, okay, we made a price run, right? We have a strong displacement candle. We're targeting this high, but the benefit of knowing where rejection blocks are is we see it on our lower time frame chart. We're tapping the 50% of those higher time frame rejection blocks. And then as you can see, this inverses. So this is the type of trades that I look for off of rejection blocks, is basically people who look like they're trapped long off this displacement candle, tap the 50% of the rejection block, and then form an inverse. Keep in mind, we're inside that 4-hour OTE, so that's an extra confluence. And then essentially with this, you can see this reaction in hindsight, see it was strong reaction off the 50%. We have an inversion as our entry confluence, and then you can play this rejection block all the way down. And as you can see, we dump so aggressively. And rejection blocks do tend to cause this kind of reaction, especially since we have other confluences lining up. You will have very aggressive reactions off of rejection blocks when you use them properly. So that's essentially it. Rejection blocks are very versatile. Like I said, you can use them in this way, and this is mainly the way that I use them, but also you can use them to identify consolidation. If you see rejection blocks on both sides of the market forming frequently, you can assume that we're going to get stuck in a range or a consolidation. So you could either not trade it or trade it accordingly. So that's pretty much all I have for you guys on rejection blocks. I hope this video was helpful. If you guys have any questions, obviously reach out to me on Discord. Make sure to get a hold of this free indicator. I'll leave a link in the bio for this. And yeah, hopefully these videos are helpful. And if you guys have any suggestions on other videos you guys would want to see, just let me know. Obviously, I'm going to be making a bunch of content, mainly revolving around our indicators, but also anything that is helpful to the community that you guys want to see, I can make some videos on it. So with that being said, I'll see you guys in the next one.